Okay, and we're live. Roy, happy Sunday.
Yeah, happy Sunday. Bootleg weekly edition. So we won't be meeting on Monday. And I forgot about jury duty on Tuesday for me, so I couldn't make it. So thank you, Tevis, for making this happen. We are going to have a special guest. He may or may not show up. He will show up. And we'll save. Should we save who it is?
I mean,
I
I
think.
think I think we can save who it is. It's fine.
All
If
right.
it doesn't show up, then we can
Make
have
fun of him.
some ambiguity. Will we stay till futures open? When do futures open? I thought there were six, or is it eight?
No, futures are open now, or they should be
Yeah.
opening right now, I believe. And then pre-market opens in 2 hours from now. So
Okay, so
we should
pre-market
start to see
opens
some moves.
in two
Yeah, it
hours.
does look
Yeah,
like, yeah.
yeah. I think we'll stay till pre-market opens. It's a 2 hour show usually. It's
Yeah.
midnight for me though, so we'll see how. But I think with three people here, if our guest decides to show, then
Oh
we'll
yeah.
have enough.
Yep.
Ready
And
for
I've
the
got some
entertainment.
questions. Yeah, did you watch the Canada game, the World Cup game at all?
No, I was recording a ServiceNow video. I saw the score at the end and the fact that it was like in the extra time that it was scored. That was cool, but I didn't watch the game really. I kind of like
Yeah.
skimmed it.
Yeah. Yeah, I'm excited for USA's on Wednesday, but yeah, it'll be good. Well, let's start maybe with that actually, because I saw some follow up questions, Tevis. So we by the way, BKLY Weekly, just as a recap, we're going to talk about some news as far as chips, a little bit about Palantir and ServiceNow, some Google news, broader macro, the Iran, what's happening between the Iran and US, and a couple other things as well. You mentioned a ServiceNow video. Um, I don't want to spoil the video, but like, why why not Palantir? Because I've seen some people like ask that question. Because same space, both I think are excellent companies. Is it more like the valuation, the multiple? Are you seeing like, hey, the estimates are just way better for ServiceNow? Like, what exactly between the two?
Yeah, I mean, like just because I'm buying one doesn't mean I dislike the other or see them as interchangeable. They're very different companies. They've got hit in the same space or for the same reason, let's say. The reason I really like ServiceNow, Roy, was because it's completely oversold for a narrative that I don't think makes sense. Fundamentals are pretty resilient. CEO is buying, hand over fist. You have Jensen coming out saying ServiceNow is going to be a winner. And as agentic AI continues to expand, I think their addressable market is going to increase, not decrease. Like they're not going to get disintermediated away. They're going to actually benefit from that. And so you can actually see an expansion in as opposed to a contraction in their business. And meanwhile, like that's not at all what consensus is for the business. And so in my opinion, it's more of a mispricing play as opposed to anything else.
Okay, yeah, and fair enough. I'll disagree with you on it. Kind of, it's I think it's not even close, but time will tell. And I don't think that you'll be disappointed with what you're buying. I just don't want you to miss out on the Palantir train again. So, but like that said, like I guess I'll just say as far as Palantir, like I'm starting to add a little bit more aggressively. If we see Palantir fall to $100 or below, I'll start to actually meaningfully add. I did do a not a huge buy, but I think I added like 5% to my position, not 5%, so like doubling my position with the most recent buy. So not massive buys yet, but just trying to make sure that I'm careful because the valuation is still not like cheap, but I also don't think it's expensive. So like I'm not expecting when I'm making this buy for Palantir like that we're going to be back to all-time highs within the next 12 months. So I guess like just for your expectations on service now, again, I don't want to spoil your video, but are you like is this more of a trade for you and you're like, hey, I think that I can make X amount in whatever time, or are you thinking like long-term position?
Yeah, I think where I am right now is I'm treating it as a swing, and I think ServiceNow can definitely go back to 200 in the next 2 years. I mean, even sooner than that, frankly, as the narrative changes. July 21st is we're going to get some more information on that from earnings. And that's really the point, Roy, where I'm going to be looking at them to potentially go in deeper or as a longer term hold versus what it is right now, which is a swing. like I am writing covered calls against them as well. And so if this thing gets to 140 in a month, then I get my shares taken away and I make a hefty little profit and make it like a bandit. But I think that July 21st, like, so they had their biggest single drop in like history. They fell like 18% on their last earnings. And the results were pretty good. I mean, I don't know.
Yeah, they were.
They made a couple of acquisitions. People are saying like, oh, they're using these acquisitions to cover up their numbers. And it's like, dude, like the acquisitions weren't even reflected in the quarter. And so I think their latest earnings that they're going to have is going to start to break that narrative that AI is going to disrupt the business. And I think we can have a violent move upwards. And so that's why for me, it's like it's more of a swing than it is a long term hold right now. But, based on what we see, I think if the remaining obligations are strong and the growth rate remains resilient, like full year guidance is in line or raised. The CEO also said, "Hey, look, the AI revenue it's going to beat expectations yet again, over 1.5 billion." So I think there's a lot of like green shoots that we could be looking out for in the next month for ServiceNow to potentially turn it around. But right now, it's sort of like a middle of the pack type of position that I'm not really gonna make into my number one holding, nor am I gonna sell it off completely. Like I think there's a thesis and there's a time frame for that thesis and there's like a risk tolerance for that thesis, and I'm just going to see it play out.
Yeah, yeah, I think they're here to stay. So we'll see how it plays out. But I appreciate those insights. Futures are a little bit green, and part of the reason why, of course, is the next topic here is what we have as far as Iran and U.S. Tevis already mentioned it, but in essence, we keep joking, but it's like shortest ceasefire ever. And these two, so we talked about it on Friday that Iran had made an attack on a container ship. United States struck back, and they've struck back a little bit as well. There were some memes over the weekend that like the United States was like the first country in the world to host FIFA and also bomb one of the countries participating in the same time frame or same week or whatever. It was just kind of funny. So this is good. It's a pause. It's a meet and negotiate. Hopefully things continue to get ironed out. I think the market is, and it has been in the past, ready to move on. But is that how much of a concern is it for you, Tevis, as far as that specific macro piece? And I'll just say for me, I think the market is maybe understating the danger here. Like if things, I don't think things will heat up. These two have not been serious about attacking each other for a while. It's been a little bit tit for tat. But if things do heat up, I mean, that's a real legitimate bear case that will drive inflation, will cause a lot of contraction. I just I think it's probably a low percent chance. So what do you think?
I don't think the market cares at this point. I mean, I'm sure that will sell off if it drastically goes off the rails. But honestly, man, if I put on my tinfoil hat and I just go full conspiracy theory, I think there's conversations behind the scenes where both of these parties are like, let's manipulate the shit out of the market so that we can both profit off of oil, and futures and whatnot. Because I can see the future, Roy, and I'll tell you exactly what happens tomorrow morning before the market opens. Is 30 minutes before the market opens, Iran is going to release a statement saying that, oh, we're actually not going to talks, and what Trump posted last night is fake news and all this, because it's happened the last 5 times. It's very predictable, to the point where, wasn't there an official at the Pentagon that was saying we were delaying on strikes until the market closed on Friday? And so you have strikes after the market closed. You have reconciliation on Sunday before futures open, and then you have Iran coming out and denying the reconciliation before the market opens. And it's just like, dude, you run the same playbook 5 times, and I think the market doesn't really care anymore.
Yeah, I think the market has been ready to move on for a while, but that's one of the things that it's a double-edged sword with the markets. Is the president right now has been probably more focused on the markets than any president, at least since I've been paying attention, since I've been alive. And I don't want a president that just completely ignores the markets because, again, a lot of American retirement is tied into the performance of that. And of course, it's not a one for one, but essentially it's a bet on the U.S. economy, especially the broader index. But I also don't want to see foreign policy decisions made that are revolving around the schedule of the markets. And what I fear, Tevis, is on the other side of this that Trump's not going to be in office forever. He has 2 more years, and midterms are coming up. We'll see if he's a lame duck or not afterwards. If we have gridlock, I think the markets will actually love that. But if an administration gets in that, a lot of times in politics, it's not just a, hey, let's go back to normal, but instead you go to the opposite extreme where instead of being like kind of apathetic towards the markets or maybe slightly favorable, like you're antagonistic towards it. So I hope we don't see more of that, but like the perception that I think that this might be creating, sadly, there's a lot of Americans that do have exposure to the stock market, but the vast majority of the wealth that's in the market, as far as from the United States, of course, is concentrated in the elite. And so this can also appear like Trump is just favoring the elite. And as a result, we might get a massive pushback in the form of something very unpalatable like, hey, let's tax unrealized gains, which is just the dumbest approach ever to handle that situation. But what are your thoughts there? Is that a real danger? Am I?
I don't think so because I don't think so, Roy, because first of all, taxing unrealized gains is just un-American. It runs antithetical to the whole American way of life, I think. And so much of that passive investing money, the retirement funds, like every 2 weeks, people putting in a portion of their paycheck in ETFs. That machine is not going to stop because you have a president that leans in one direction or another. It's still going to keep going. So that's the first thing. I don't think that's going to change anytime soon. The fact of the matter is, like, I was very pro what Trump was doing at the beginning because I was like, oh, he's flexing American strength on full display. And I think that was something that needed to be telegraphed for a long time, after Biden, where it was more passive on a geopolitical scale. That
Right.
sentiment, from my opinion, right, did a 180 pretty much right after the Maduro thing because I'm like, all right, cool. Now we're going a little bit, too far because there's ulterior motives. There's, the stock portfolio gains and the Trump coin and Melania coin, all this other shit. Like, okay, guys, we get it. And now it's at that point where the 2 days of peace that we had with Iran, he was threatening more tariffs for the digital services tax. And it's just like, man, I think you're hitting that button way too much, where it's just more and more and more waves that opens the door for market manipulation, right? Let alone the stakes that he's taking as a government in actual companies where he's betting on a horse when you're supposed to be a sort of third party that sits outside of the system. So what am I trying to say? Well, I think if somebody else comes in, is the manipulation going to be less? Maybe, maybe not. Maybe it's just going to be a little bit less blatant and a little bit more hidden. But I think the actual money, the people that are lobbying, the institutions and the companies that are lobbying, like they're still going to want everything to go as it's been going, regardless of who the figurehead is, because of this passive investing ETF machine and because of the money printing, right? And the central bank, and all of it contributes to rising asset prices. And it's really going to continue this trend over the long tail of being haves and have nots, of people who invest are going to see their assets appreciate naturally as a feature built into the system. And the ones who don't are going to see their prices increase and their wealth decrease as a result of the system itself. Because when you inflate the currency and you pump more money into the system, all asset prices are going to go up regardless of who's president. And that is a sort of, that game has started and the ball is rolling downhill and you can't really stop it at this point. It's gotten too much momentum.
Yeah. Yeah, we'll see. Hopefully, it doesn't go that direction. But there's always another side of the coin. Um, Pivoting just a little bit, this was really interesting that came out. This is a summary from Financial Times. I don't have a subscription to Financial Times. There's a couple other pieces that came out as well. But they got some kind kind of insider type of information. And we've been kind of wondering, Tevis, you're as a shareholder in Meta. Neither of us own Google, but we both like Google. I've perceived, and I think you have as well, underperformance, of course, in the stock itself for Meta, but also for the company, that relative to where you would think that they would be with all the talent that they brought in, the money that they're spending, they're not as far along. Now, I don't want to necessarily revisit that, but this gives some interesting information along that. So, Financial Times had said, and this is a direct quote from the article, Google has put limits on Meta's use of its Gemini AI models after the social media giant sought more computing capacity than the rival tech group could provide in the latest evidence of the infrastructure constraints facing even the world's largest AI providers. Google told Meta around March that it could not provide all of the Gemini capacity the company wanted to purchase, according to 3 people familiar with the matter, in a move that has disrupted and delayed some of Meta's internal AI projects. You're a Meta shareholder, so what are your thoughts around that? Do you think that this kind of explains perhaps the underperformance that Meta has had, not as far as a stock, but a company? And is this a cause for concern?
I think it's just a wake up call, not necessarily just for Meta, but for all of these companies to not solely rely on a single provider, because there's going to be compute constraints across the board, and you sort of have to hedge your bets in terms of what provider you're using or what LLM you're using, right? It's not that Google hates making money or that Google is anti Meta for whatever reason. It's like, hey, like they're having serious compute constraints, and they're not in a position where Meta can use it as freely as they might want. Is it a problem for Meta? Sure, but I think it's something that it's a short-term calibration, not a long-term like narrative killer, because Meta is just going to say, oh, okay, like that's unfortunate. Yeah, let's actually go to this other model as well and just use it as a backup, or this third one as a just implementing a series of fail safes so as to not have this happen in the future. And everybody's going to be taking note to this, not only Meta. And I think it's noise, in my opinion. It's not news.
Yeah, and I think that that's already been happening. It's called orchestration in like payment service providers is just one example of a commodity where it's like, hey, maybe you prefer Adyen, maybe you prefer PayPal's Braintree, or maybe you prefer Stripe, but regardless, you want some redundancy if you're a large enterprise. If you're a small enterprise, you got 10 employees or like, you're not going to mess with it. But if you're massive, you can't afford to just be beholden to one only. You need to have some sort of backup plan. And so usually there is some sort of mix where you're like, hey, let's do 80% of our volume with Stripe and 20% this, or sometimes it's over 3. And we've seen that, of course, some with government on the government level with the rift that has been between Anthropic and, of course, the Pentagon. And so we're actually seeing, I saw this interesting report out of the Pentagon that they just switched straight to Grok and it was performing just about as well. And that's a benefit of like commodities from if somebody else is using the product, that you can make the switch fairly easily. There are some switching costs. Of course, you have memory, and if you're used to using one, you don't know the nuances of the other. But yeah, regardless, I think every large enterprise has to go that direction. And I also, what's interesting is I think that might be the case too, for a certain extent, with data centers. That you'll want, if you're using a smaller provider, you also want to make sure you have an exposure to several others as well, not just be dependent on necessarily 1 or 2 facilities. That if they go down, if there's problems, that all of a sudden you are dead in the water. And so that I think is pretty telling here, as far as when you see that was my biggest reason here. So as I don't own Meta. Google, I'm like, I think it's a good company, but I think there's better opportunities. But this, it just reads as chips, chips, chips. So, I see some Micron questions, and also inference. Like, this is really, really bullish, because one of the largest pieces of constraint is, of course, what's happening with inference. This was a case, like, just to sum it up, Google would have loved to have sold Meta that.
Yes.
Meta would have loved to buy it. But when you don't have enough of the product, I mean, what are you going to do? And the other thing that is a big constraint, and this is one that we didn't talk about last week, but we tagged Sawyer Merritt, of course, didn't break it, but I think he had a really good synopsis on this. There's a partnership that was announced related to what's happening with power, a huge source of constraint for these data center projects between Tesla, Sunrun, and Renew Home. And in essence, basically what they're doing is they're not building capacity, but instead they're like, hey, the grid is really inefficient, that there's all this through EVs, through thermostats, through home renewable energy systems, basically more than 8 million smart thermostats that they can basically tap into that, give some incentives, some rewards to consumers. Don't know what those exactly look like. It's too early to tell, but up to 16.8 gigawatts of capacity can actually be arrive into the market from that. Now, this is not them basically saying, hey, we're going to be like Europe and we're going to send the police out to people and stop them from using air conditioning so that you can just die from heat exhaustion. But instead, it's a, hey, here's this opportunity that if you are willing to turn your thermostat up a little bit or use a little bit less energy or not charge your EV during these certain times or allow us even to tap into like your power wall, this is the incentive that we can give you. And so in essence, it's something that, at least from my perspective, it seems like it benefits consumers and it also benefits the data centers. But the thing is, 16.8 gigawatt, it's a nice headline. It's a pretty picture. But the reality is they're going to get a lot less than that. So I don't know if you saw this earlier in the week. And if so, like let me actually read this one quick because I think it's important. But I want your take as well, Tevis.
Sure.
Does this like help solve that energy crunch over the short term? Deployable in months, not years, this capacity as a solution framework creates headroom on the existing grid by freeing up transmission capacity, easing congestion on distribution infrastructure, and extending the duration and depth of available capacity, all while helping American households lower energy bills, earn rewards, and power through outages. Thoughts?
The way I see this, Roy, is not necessarily like we talked last week about the definition of deflation versus disinflation. So, like, inflation is the purchasing power deterioration over time, the money essentially losing value, and the rate of inflation is going up. Deflation is just the opposite of that. Disinflation is just the rate. You still have inflation, but at a lower rate. So the rate is going down. That's how I'm kind of thinking of this, like what my gut response is. It's not necessarily that this is going to solve the problem or even work towards solving the problem. I think it's just going to slightly reduce the degree to which the problem is expanding because the demand is still vastly far outstripping the supply, and the demand is going to accelerate beyond the rate at which the supply accelerates. But having smaller solutions like this get it closer to a equilibrium versus the imbalance where it currently stands, if that makes sense.
Yeah, for sure. Yeah, I think it might actually be something though that does help us kind of bridge the gap because right now, with the problem with we've underinvested in our energy, in our grid, in most of our infrastructure, frankly, and now the incentives actually align and kind of force investment. Like if you want data centers online, you have to figure out a way to do that, and so I think that that'll catch up. But there's an air pocket. There's a gap between what they need right now versus what can be built. And some of these projects take years, especially if you're looking at nuclear. You're looking at maybe 2029 for some of the larger projects coming on, and that's assuming that they run on time. So there needs to be something that's more near term, especially when you have we have a lot of natural gas, but you also need natural gas turbines, and now there's some recycled projects, all sorts of different aspects. I think that this is just one of several different innovative solutions. Usually, when you have incentives out there, you have a need as well. It can create some innovative solutions. And so I think this might help bridge the gap. It's certainly not the long-term solution, but I hope that at least on my first read, like it really is a tangible benefit that people can look at and say, hey, all of a sudden these data centers projects that I was skeptical on before, because I don't use AI, even though I think many people probably do. They just don't realize how they're using it necessarily, but that they also might say, hey, these data center projects are now knocking $50 off my bill per month. That's something that's real. $600 a year. That's not something that most people will be like, I hate that. Especially when it's optional.
Yeah, like I think we're moving in such a uncharted territory in such a fast pace that it's really difficult to see the bottom of this pool. It's what is going to be the extent of the demand over a multi-year cycle, and the extent that or the speed at which we can meet that demand with new supply that we're running up, whether that's from a data center perspective, whether that's from a energy perspective, or anything in between, tokens perspective. It's how insatiable is the demand, and how can we satiate it in the most sustainable way possible. And everybody in between across that spectrum, Roy, is just speculating as to how deep that pool goes.
Yeah. No, I think that's a fair take. One more kind of related that I saw a post, and I don't know where he got it from, but he usually is careful with these sort of things. Shai Balor ended up posting this, and I don't know if you saw this. He posted it, I guess, this morning, looking out at 2030. Now, you have to take estimates that far out with an absolute grain of salt, especially when it's in a new space that is just kind of at the beginning of its growth curve. But these are estimates for 2030. Two things really stand out for me. So obviously, the reason why we talk so much about CoreWeave, Nebius, and Iron is those are the big three. They just are. Irons, I think, are a little bit harder to project just because they don't have that massive contract that they have unsold capacity. And so if you look at the funnel, I've talked about it before, but
sorry, what is that? Is that the company that's sponsoring Golden State, right?
Yeah. I think they're an NBA sponsorship company or something, but yeah.
That's cool.
No, I mean, I think that they'll get there. I don't think shareholders would be, I'd be upset as a shareholder, but also yeah, it's not great, but it is what it is. But we talked about that on Friday. But this right here, so I'm not in Nebius anymore. I would like to get back in if there's an opportunity, but I pivoted over to CoreWeave. If this is right, this is insane. 90% EBITDA margins. And a lot of that is because the NeoCloud. Those can typically command higher margin profile. The other is, obviously, the size, almost $40 billion in revenue, could be wildly different than that. But CoreWeave, it's just massive. It really is. And yeah, the margins are not as big. Again, they are bare metal, more so than anything. But 68% is still incredibly good. And that is an insane amount of revenue. And so people that are like, hey, how are they going to service their debt? All of them have some debt. But CoreWeave has more than any. It's the largest as well. If this is even halfway right, this is insane for Nebius. This is incredible for CoreWeave, and Iron is no slouch at all.
There's a ton of assumptions baked into these, man. First and foremost is, okay, what is going to be the take rate of the software offerings? Because that's going to heavily dictate the EBITDA margins. And then obviously modeling out to 2030 is adding a spoonful of salt, right? Because if your assumptions are wrong in 2028 or 2027, they're going to have downstream effects of your 2030 numbers. And so, not to mention all the things that can go wrong with that and the whole execution risk that's baked into that. If these numbers were to come true and I'm holding Nebius at 2030, I'll be a very happy camper, but I just want to pair expectations.
Yeah, it'll be you adopting me, not the other way around at that point. So.
Yeah, exactly.
It's, all of these are if you were hey, I don't like any of the big three, but I like TeraWolf, or I like, Cypher or something like that. Look at where they're at, look at where they're going. Now, there's a lot of execution, a lot of time between now and then, but yeah, there's a lot of ways to play it. So I saw a question by Joppy, ex-Joppy. I would think Iron had the lowest margins. Why is Iron projected to have higher EBITDA margins than CoreWeave? Two reasons for that. So one is they are forming a NeoCloud. I don't think it's as compelling and it's as strong as Nebius. Nebius has put in a lot more work, both internally and as far as acquisitions. But Iron, if you go back last month, they had an acquisition that they announced, which basically resolved one of the things that they were weak on, which was Kubernetes. So they are building that out as well. You would expect that to be a little bit higher EBITDA margins. And also they own their own power. So they're vertically integrated. Not every facility, but a lot of facilities. So that's a little bit unique to Iron. So I actually think that they would definitely have higher EBITDA margins. Now, CoreWeave can do some sort of pivot. Things can change, but as it looks right now, I think that that's accurate. So the actual revenue, I think that's hard to predict.
not to mention, Jappy, that if Golden State wins an NBA championship with Iron on their jersey, that's obviously going to affect Iron's EBITDA margins as a result of their marketing and brand awareness there. So this is the professional analysis you come to this channel for.
Yeah. The markets can be hilarious at times. So, all right. So, one more thing, and then we have a question that a donation. So let's hit that first, and I have one more question for you, and then we'll hit the Q&As. Actually, maybe a little bit early, unless our guest shows.
Jack, thank you for the $5. Any thoughts on Zeta and Palantir partnership? Data management seeks out data. Steve is pimping it hard. Steve owns both and is bullish on both. So, yeah, this was 2 weeks ago, Roy, that this partnership landed, something like that.
Yeah. There was I think it's more bullish for Zeta than Palantir, but like it's good for both, and it just kind of showcases how strong these are as companies. I don't like. I'm not a Zeta shareholder. I see why people would hold it. I think it's a good company and a good opportunity versus a great one. And I could absolutely be wrong on that. Like there are some indications that maybe I'm a little bit more or not as optimistic as I should be on that play. But and this I think partnership. Let me pull it up real quick. Zeta. There was some revenue number that was put out there, and I want to make sure I get it right. Okay, it's 5 days ago, and yeah, here it is. Okay, so this is on Zeta's site, which and you can read a lot about it, but basically it's well, I'll just read two things. So it says that they have a strategic partnership to build the enterprise AI infrastructure layer that connects operational intelligence, customer intelligence, and marketing execution. Together, Palantir and Zeta are combining AI infrastructure with Zeta's intelligent decisioning and trusted data to bring a new standard of data-driven agentic marketing to the enterprise. And this right here was interesting. So this is from the co-founder and CEO of Zeta, Steinberg. The next generation of enterprise value creation will come from connecting operational intelligence with customer intelligence. We believe that this partnership can drive more than 100 million in annual revenue to Zeta for the coming years and help define what winning looks like in the agentic era. So that's a really, really nice bump if they're at all accurate. And if you look at Zeta's history as far as their execution, usually when they put out numbers like that, now I'm not a Zeta expert, but they tend to be more right than not. Actually, let me back that up. Not just more right than not, on the conservative side with a lot of what they're projecting. So if we look at the financials, let me pull up and show where the revenue currently is and what people are expecting. So we see the revenue here. Currently, over the last 12 months, it's 1.4 billion. So adding 100 million to that, I mean, it's not like they're doubling revenue or anything, but this is not the only thing that they're doing. And so if it's 2 years out that they've added $100 million annually because of this partnership, like that's really, really good for a company that, as far as revenues, is already growing very nicely. It's growing at 33.6 year over year. And if we look at estimates here,
I think
let's look at the revenue.
Nice. I think you're being way too nice on this, man. It's like 100 million out of 1.4 billion. Is that what we're looking at? It's like 7% over the coming years. We don't even know if that's going to be distributed over coming years, when it's going to come. It's inconsequential.
I mean, I wouldn't necessarily say that. So just because, like, if you look at estimates, like if estimates were like, hey, this is going to go to the moon and they're just going to print money, you actually look at estimates and it doesn't have a ton of analysts, but there's enough when you're in double digits. And you can see there's not really been any revisions since then, despite them saying like, hey, we can add 100 million in terms of revenue, which is actually really incredible. The funnel is very, very tight here, and I think it's on the downside. Now, again, I don't think this is an elite opportunity necessarily, and there's other people that do, and that's fine if you absolutely think that. You may be right. But I think that there's plenty of room for the upside, and this is just one of several things that they're doing. So usually, as far as the estimates, usually as far as their own guidance as well, they smash those. I mean, they have a long history of doing
that.
Yeah.
Michael said
the other
a BM&R hat in the back.
Yeah.
Just
Uh,
immediately calling you out. It's on the
here it
ground. Is
is.
that where it is, Roy?
Yeah, yeah.
Or
I've got a
go
few things on the ground there. So, but
along the
yeah, it's just depressing. We're in the middle of winter, so I'm still in it. I haven't like the last I sold was in the 30s. I trimmed some of the position just because I was like, hey, there's more downside here, and we are in crypto winter, and I'm like, hey, I predicted that Ethereum could go to 1500, which we did, and also that BMNR could go to 10 to 12 would be probably the lowest it could go. And so in like 33 or whatever I sold it, I'm like, that's a lot of downside. So I didn't sell my entire position. I still want some. I do plan to probably add, but the hard thing is like with a lot of these plays, it's not just in a vacuum. Like if BMNR was the only thing that was soft and the only opportunity I saw, man, I'd be loading up the boat and pounding the table. But there's a lot of opportunities right now. And one of those right now, Tevis, which I'm not going to add to, well, let me ask it. Let me give you an opportunity to talk about BM&R too. And then I want to ask you what company you're most excited about for earnings this season, because we're about to earnings season.
That's wild. It's shocking how quickly time flies. It felt like earnings season was just, it just ended recently. But
Yeah.
what do I think about BM&R? Is that the question? I think that we are squarely in winter, and Tom Lee saying it's spring is bullshit. I think uh, Tom Lee is kind of like the boy who cried wolf in many aspects, because regardless of being in winter, instead of calling it like it is, and we're adults, we can live with it, continues to put out price targets and continues to paint a rosy picture. And I just think it's a little bit tone deaf in the grand scheme of things. I put out a post today and I said, look, I'm shocked that these, people are saying like, oh, well, when BM&R is trading for 2 MNAV or 1.75 M, and like, guys, like, what is the catalyst that's going to get us there? Right? Like, other than, oh, when we're going to a bull run, the MNAV is going to expand. Sure, I don't disagree with that at all. But I think for the foreseeable future, especially with regulators pushing out the Clarity Act, my confidence is smaller and smaller that we're going to get it passed before the August recess. And after that, I think it's going to get punted to 2027. And so if it's punted to 2027 and that's the primary catalyst for Ethereum, well, you're not going to start crypto spring until probably mid fall, because the market is forward looking, and you're probably not going to start a bull run until, Q1 or Q2 of 2027, let's just say. And so you're looking at a close to a full year of that MNAV being struggling where it is at 1, or in many cases, as it stands right now, even below 1.
Yeah. Yeah. It's like, and I think that's fair. Like a lot of, if somebody is kind of newer to crypto and maybe they've experienced like one full season, when crypto winter ends, it doesn't mean that we're back to all-time highs in the next month. It takes a while, and historically it has. I don't think this time it'll be different necessarily. And so, like looking at that, not trying to time anything. That's why I still have a position. I'm like, hey, I can just let this ride, especially where it's at right now. But I think by quarter 4 we're out of crypto winter. Maybe that's late quarter 4, but that doesn't mean all-time highs. That might be BM&R at like 18 or 20. It's not too different for where it's here. So
Yeah.
versus some other plays, like you said, like you're in a meta investor. I'm not, but you're like, well, you probably expect that meta will outperform BMNR over the next year. So why not invest in meta?
Yeah, look, again, I don't want this to sound like I can simultaneously be critical and also holding a bag, just like the rest of the people watching this. Just because I'm critical doesn't mean like, oh, okay, well, sell out and shut up. It's like, guys, I would hope that people would watch this channel to get nuanced takes, both bullish, bearish, and neutral, right? Instead of just being an echo chamber of bullishness when the stock is doing something completely different. And quite frankly, it's a cyclical, asset. So for me, I want to call it like it is. And I want to say, hey, look, opportunity cost is a real thing. And yes, I cut my position at a loss. Don't get me wrong, because I thought there was better opportunities, but I'm still holding a portion, and I'm not against adding, but I don't want to add at this point. I want to add when I think it's going to get ready to start turning around, because fundamentally I do agree that there is value in Ethereum, and as a result, there's value in BMNR. However, it's been managed, right? But like, you don't have to be all of it or none of it just because you're holding a bag, and you're like, I am too, and like, that's fine, dude. I've been holding, the SoFi opportunity cost bag for years. Even though I'm sitting on like a 2x on SoFi, I could have been sitting on much more if I had rotated that. And so I kind of want to continue to make BMNR content, and talk about, you know, what I see as an issue, or what I see as a catalyst, or what I see as, something to look forward to, while at the same time being agnostic to what I'm doing with my position. But people immediately jump to, if I'm saying something positive, I must be buying, and if I'm saying something negative, I must be selling. And 99% of the time, I'm not doing anything.
Yeah, yeah. And usually doing nothing is right, but there are times to make moves. All right, so a little bit of a pivot as far as earnings season. We're going to an earnings season, and this can be a company that you hold or don't. And if there's like two, you can mention that by any means. I'll give you a little bit of time to think about this too. But out of companies either you hold or you're watching, which one are you most excited for as far as earnings, or you think that there might be an opportunity here? Now, I'll caveat that in case people are following us and they're thinking like, hey, we're trading around earnings. I don't do that. I think there's way too much risk in that. I'd rather just buy and hold long term. But for me, the number two company is Palantir, just because this is the first time for earnings that we're going into this with pretty soft expectations compared to where analysts were over the last couple of times, even though Palantir blew that out of the water. At the same time as there's been some multiple compression, it's still not cheap, but I don't think it's incredibly expensive. And I'm really, really interested because we've continued to see the acceleration all the way up to 85% year-over-year revenue growth. Carp mentioned during the last earnings call 100% is a target for next year. The numbers are getting bigger and bigger, and so it's harder and harder to maintain that insane growth rate, but we've seen some massive wins as well. And so I'm really curious, are they actually even able to accelerate above 85%, which would be obscene? And also if they raise guidance. And I think that probably the answer is both to those, but I do need to crunch the numbers. But the number one company that I'm actually really fascinated by, and I want to see here, and it's not always been the case, is Robinhood. So I actually came out with an article that I posted today on Artemis. You don't have to log in or have an account, but it's very long, very detailed, lots of information here. But my prediction, and I'm like very confident that I'm right, is that for this quarter, and I don't think it'll be the only quarter this year, I think quarter four is likely as well. I think the revenue that Robinhood gets from just the predictions market is going to be more than the cryptocurrency revenue. A couple of factors with that. So one is, of course, what's happening with trading volume. And so let me do this here so we can see it a little bit better. I guess I could have incorporated the last day. So obviously we have Kalshi here, which is this big green bar. And surprisingly, a lot of this growth, of course, it's a World Cup, and Kalshi traditionally it's heavily associated with sports betting markets, specifically in the events contract. But a lot of it, actually, a sizable amount of their growth has come from outside of sports as well. Of course, traditionally, Forex Exchange, which is IBKR's, to a small degree, and then Kalshi are Robinhood partners. And so with Kalshi itself, you're going to see Robinhood basically move away from this platform. They launched their Rothera platform. That's this white little section here. And it's maybe a little bit hard to see, but you can see times in the past where something comes out like, Opinion here. We saw Limitless at one point, a little bit of volume there for Limitless. We've seen Probable as well. That's like, hey, a third option is actually coming into the market, and then it just fades. What's different with Robinhood is they own the distribution layer. So they're basically creating this platform, which I think others will use, both in terms of the pricing, in terms of the governance and the way it's designed. I think that even some of their competitors might actually end up going the direction where they're using Robinhood, and Robinhood's starting to get platform money. But they're, at the very least, they're able to shift their volume over. And this, by the way, is not all of Robinhood's volume. This is basically just World Cup volume if we look at the Rothera reports. And so if we go back here, you can really see how they're emerging when you remove the other players. The white bar is Rothera. So it looks tiny when you're comparing it to the giants, but it's really not that small. And it's like it's just going incredibly well. You see, of course, that they have an estimated at least 5.2 billion in terms of their events contracts that happen in June. The acceleration is insane, and people are like, "Hey, it's just World Cup." That's
Mm.
part of the factor, but there's a couple other things going on beyond that, and I'll save some for the article. But we have football season coming up, college football, and of course the NFL as well. We have elections coming up in November. We have a lot of different events, and yeah, the World Cup is once every 4 years, and it's driven an incredible amount of volume. But it's not stopping there. And the really fascinating thing too is like looking at the unit economics. So right now, since they use Kalshi, when somebody trades an events contract on Robinhood, it's a little more expensive than elsewhere. But again, people use it because your money's right there. They make it convenient, easy UI, easy to understand, and everything. But they share 1 cent with Kalshi and they keep 1 cent. With Rothera, they are going to reduce the take rate overall. Vlad mentioned they're not going to hurt the take rate. But right now, so the Rothera volume, I'm not exactly sure where it's coming from. I need to double check a couple more games as far as World Cup. It's not a 1-for-1 as far as volume. So I'm not sure it's Robinhood versus another partner that's already using it. But what's interesting is if that's not the case, Tevis, my estimates are already for the predictions market to surpass crypto revenue this quarter. I think Q4 will also be the same. But what that implies is with the massive volume, we had 918 million in volume last week, 739 the previous week, most of that World Cup. If it is Robinhood and just on their platform, instead of the 1 cent for them and 1 cent for Kalshi, it's all for Robinhood. And that's a meaningful bump as well. Like this is a large amount of money. If you're saying like, hey, you get 2 cents per contract and there's 918 million there, you can do the math. That's 200 or $20 million in a single week. That is absolutely ridiculous, and it really sets a stage where I think predictions markets, as long as regulation doesn't step in and get in the way, I think that going forward that this will pretty consistently be an outperformer and overperformer above and beyond crypto for Robinhood. And so I don't think the market's giving them some premium back. It's not fading Robinhood like a lot of the other fintechs right now, but man, they're positioned so well, and it's just like one of several things that I'm excited about.
Yeah, let me respond on Robinhood. First of all, Kryptonite said, "Why are you guys live right now? It's Sunday, God's day." Well, unfortunately, uh, the government apparently comes before God in the eyes of Roy because he has to serve jury duty on Monday, and so that's why we're live today. Uh, with regards to Robinhood, I think it's gonna do very well. I don't know to the degree to which this is priced in with these events and the volume from these events. The thing that I was thinking about, Roy, as you were saying that, was the huge amount of insider purchases you had over the past several weeks from insiders. So, obviously they have access to more insights than the regular average Joe does. I think Robinhood is going to continue to do very, very well. I think they're going to reclaim, the $100 plus area. So I think that's a good pick. For me, yeah, futures are open and futures are green. For me, the top two that I'm looking at that I hold for these earnings. So one of them is ServiceNow, and I talked a little bit about that because I think this earnings is an opportunity for the perception of ServiceNow to change, and as a result, for us to get a big turnaround in the stock. And if I'm holding it as a swing trade, then that's a big factor. And then the second piece around that is that this earnings is really going to be a determining factor when I get more data around whether I want to keep it as a swing or if I want to have it as a longer term position where I see a structural advantage over a multi-year period that this thing is fundamentally mispriced and you're going to get a higher ROI as a result. The second piece that I'm looking at, I'm in between Amazon and Nebius, and I can tell you about both. But let me say Nebius simply because I think there's a couple of main things that we should be looking out for this earnings. First of all, there's going to be a contraction in terms of the margins that they guided for in this quarter. Or is that Q3? No, I think that's Q3, and this is Q2 that's coming up. So just ignore me. What I do think, however, aside from that, is we should get that CapEx expansion funded. We haven't really heard about that, right? Because they raised their CapEx guide to what, 25 billion ish, and they have to fund it, right? So how are they going to do that? Are they going to announce another deal? Like, these are, I think, the things that are going to come up at some point on earnings or around earnings. That could be an interesting piece. And then for Amazon, like, I think the market is eventually going to wake up to the fact that Amazon is a sleeping giant and will do very, very well in the AI race. Like, that capex that they're spending is going to end up being a drop in the bucket when you see the ROI for AI, and also their stake in Anthropic once Anthropic goes public, and what they're doing with Tranium and the progression that they've had there. Amazon does not deserve to be trading where it is right now, and like, I want to keep stacking shares of Amazon ahead of earnings, because I think at some point or another towards the second half of the year, the market is slowly going to start to wake up to both Meta and Amazon.
Well, I think that's fair. I almost said CoreWeave is one of those, but like when I'm going in, like I think they're going to crush numbers. I more look for things that change the narrative of the direction, which tends to benefit the stock price momentum. And I don't know that even CoreWeave crushing their numbers as far as their backlog is going to do enough to change that. I think they'll do well. There's a lot of companies I hold like that. So yeah, I like your picks as well. It's going to be really interesting to see, especially on the CapEx side for Nebius, and then also for Amazon too. Are you ready to hit Q&A?
Yeah, we can hit Q&A. We have 25 questions bookmarked. Some of these are heavy-hitting questions.
Yeah.
Roy. People are, coming prepared in the Q&A section. What's your opinion on investing in Robinhood, like 220K? Appreciate your opinion. I think Roy laid out a pretty compelling case for some catalysts to look out for Robinhood. Go ahead, Roy.
So this is their managed portfolio. So you basically are like, hey, here's some money, you manage it for me. Usually passive funds actually outperform active funds. It's not always the case, and I think that there's some brilliant people at Robinhood. So I would kind of weigh that the current performance. I think under Steph Guild, she's fantastic. Myself, if like that's a large chunk of your investment money. Or if I was in your shoes and I'm like, hey, this is going to be the largest part of my retirement portfolio, I would personally, as much as I love Robinhood, just put it in a passive ETF, something like the SPY or NASDAQ, or a split between both rather than active. I do have, that said, like the way that my portfolio that I don't touch, that is managed, it's either, mostly it's passive ETFs, and I think maybe 20% is active. And active usually has underperformed, but that's actually managed by Schwab. So I would much rather Robinhood manage my money than Schwab. So,
yeah. Is there any case where active management, you see it having an advantage over passive?
So Robinhood Strategies is new enough. Yeah. Well, yes. Robinhood Strategy managed the macro stuff, I think, incredibly well, and like you can see it just like in terms of the Robinhood, like their buybacks. They don't always like perfectly hit the bottom, but man, if you're looking at a company that knows when and where to buy a dip, or on the other side, as far as Robinhood Strategies, knows when to pivot and move some things around, it's Robinhood. So I think you have to be extremely talented. It's kind of like being an active trader. I mean, this is different. This is not active trading, but there are people out there that are just incredible and they make ridiculous gains active trading. But most of us don't have that skill set. So I'd say if the talent aligns with the proper understanding as far as like where people's risks are, I think Robinhood Strategies is my favorite as far as actively managed ETFs. But I think there's much to say with passive. Like you're just like, hey, S&P 500, NASDAQ, or VU if that's your thing. SoFi has an offering that's a close proxy to the S&P 500, NASDAQ 100, whatever it is. You're like, hey, I know I understand what they're doing. But if you're able to sleep at night with this, I think they'll perform very well. I would probably guess Robinhood Strategies is probably going to be maybe the best of the best as far as active, and over short-term time frames, it'll outperform. But if you look at a decade, I don't know how much outperformance versus like the risk of underperformance that you'd have versus a passive. Passive is just, I think it's better for most individuals.
Yeah. Are we not doing the regular show this week? So we're gonna have this show, and then for Fiesta Friday, my request is gonna be that we do it on Saturday. So if that's okay with Roy, then we're gonna do it, then our next show on Saturday, and then possibly Monday, the following Monday, we might do that show, or we might keep it on Tuesday because that's my birthday.
Yeah, the thing to keep in mind on Saturday, that's the 4th of July. So, but I don't know that we're doing anything as a family. I need to double check with the wife, but yeah,
4th of July show could be fun.
it would be. Yeah,
Would people even watch a 4th of July show? I don't even know.
I don't know. Like, I think a lot of Americans. Well, we have a global audience, right? So there will be an audience. A lot of Americans on the 4th of July go out and they do something with their family and barbecues and picnics, and it is a big anniversary as well for the United States. So, yeah, we might have a little bit less of an audience, but it's possible. So let me check with my family and see. Yeah,
Yeah, I don't know.
I mean, I'm wearing this for a reason. Like, come on.
Yeah, I TBD, guys. We might do something on Saturday, and then if not, then we'll figure it out. But I'm traveling this week, so I'm not going to bring my equipment with me. So that's why I can't do it on Friday. But I'm back on Saturday. Anyways, neither here nor there. We will figure it out. You guys will get a show either way, and then the next show a few days later, it's going to be a birthday stream. So it's going to be fun too. All right, let's continue. What country am I in? I am still in Albania, and I've been here for quite a while, traveling back and forth to different places. I was in Italy recently. I'm going to be in the UK next week, and in Canada probably. I don't know, 2 weeks from now ish. But TBD. I'll let you guys. When you see my quality, video quality, audio quality goes up, and I have my regular background, that's when you know I'm back in Canada. When my hair looks a little grayer, I'm back in Canada. Would you add hood here, Roy? Numbers have been amazing, but it's run a lot from low 70s.
So for me personally, the answer is no. I've not added, and the reason why it's been outside of like when I hadn't sold anything that just ran. That briefly became my number one position. Robinhood's my number one, and so I didn't feel a compelling need to add. If it got to 60 and I didn't quite get there, I was going to buy a bunch of options. Wish I just pulled the trigger, like in hindsight, because it has run a lot. I think it depends on what style of investor you're at, and of course your risk tolerance is. There is a chance that it pulls back, even on like very good earnings and very good news, because some of that is certainly baked in. It's why it's running. But if you're looking at like, hey, I'm going to hold this for 5 to 10 years, if I didn't have enough Robinhood, I would have no problem adding here, even up a little higher too.
Yeah. Interesting question. Tevis, Roy, would you pay down a mortgage at 5% or invest in stocks? Well, can you get higher than 5% in stocks consistently? That's the first question you have to answer. I think the rest of it also depends on your life goals. Like I know some people who are like, yeah, I know I can arbitrage the difference. I can get 10% on the SPY or 8% or whatever, and I pay 5% and I make a spread on it, but I would just really sleep easier at night if I paid off my mortgage. Pay off your mortgage, homie. Like, there's nothing wrong with that. If it's up to me personally, I mean, I would probably double down on that mortgage and invest in stocks with the rest, but like, please don't do what I do. So it is a matter of like, what are your goals? What is your like risk tolerance in the sense of how comfortable are you if you have an outstanding mortgage amount or you owe money, quote unquote. But I think if you run the numbers in completely cold, like emotionless calculation, you can get an arbitrage out of the difference because 5% is not a high hurdle rate to pass.
Yeah. I think that's a great answer. Like for myself, like we do own a house, and we own like a quarter. We owe about $250,000, like as far as beyond what our equity is, and so that's a good chunk of money. And I've told folks, my retirement portfolio is not yet at the $1 million range. When we've talked about this some, and we'll revisit it when we get closer, but when we're looking at like the total assets that we can draw from outside of the retirement account, but just that I personally invest, which is a decent chunk of money, when it's going to be like maybe a 15% drawdown from that to pay down the house. So maybe 5 years out, we've been paying on the mortgage, and at the same time the portfolio is doing well. If I could take 10 or 15%, maybe a little bit more out to retire the debt, even though I would be very confident in outperforming just with the arbitrage, just the way that I'm wired, I would love to just pay it off, control that monthly expense, own the actual property. Although you can argue with property taxes, especially here in Texas, how much you actually own versus you're renting your property. But that would be me. But that's a different answer for every single person. But good
Yeah.
question.
Plus, like 5%, is that like, what's a HELOC? A HELOC is higher, probably
Yeah.
higher.
Yeah, mortgage rates right now, I think, are probably in the sevens. Maybe they're in the mid sixes, at least here in Texas. It's been a little while because I mean we're since I've looked, and so usually you have a couple of percent above from a home equity line of credit. So yeah,
I was looking at S blocks the other day, um, securities backed line of credit. So basically, you borrow against your portfolio, and it was only 4%, and I was just like, dude, like it's like lower than margin, you know.
yeah,
Um, so like, there's also arbitrage opportunities there as well. Like if you have a mortgage at like 5% or something like that, and you can take out, a line of credit or some other cheap source at a lower percentage, then like, cool, max that out, pay off the more. So the point is like, if you run the math, you can definitely find, um, yeah, you can definitely find opportunities.
very nice.
All right. Another question. I want to buy USD by converting New Zealand dollars. Do you think that USD will get weaker by interest rate cuts, or is it good to wait? USD has been on fire recently. USD has been just climbing. So I don't think, I don't know. But like, when interest rate cuts? What do you mean interest rate cuts? When are those coming? Because I'd love to know that.
Yeah, so
Yeah.
this is the DXY. It's basically a broad index of United States versus other currencies.
Yeah.
100 is essentially, you can think of it as parity. It's not quite that. So when we were up here, this is January 2025, 110. That's quite high, not at the all time high or anything close to it. And then it's underperformed a little bit. So yeah, it's climbed a decent bit since back here in April, and year to date it is up 3.18%. These usually don't move, so I don't know. It's not something that I usually track as far as but I think there's a lot of components beyond simple interest cuts. So I'm going to punt on that question and say I'm not really sure that's out of my comfort zone as far as answering that question. But there's a lot of factors that go into the valuation of a currency. A big one is certainly debt, and so keep an eye on that.
So bullish on Hood. Prediction market revenue will surpass crypto revenue for this quarter and also the rest of the year because FIFA World Cup, NFL midterms. Not really a
Yep.
question. I don't know why I bookmarked that, but we agree. Do you plan to do a stock draft second season? Yeah. I've been the one slacking on this, quite frankly. I messaged Chris. I don't think he can do it given his new role. So we got to find another person. Maybe we'll bring in Nate or somebody. But Neil is down. I am as well. Roy is. We got to bring in one more person, and then we can just do the second year. Because I think Matt, Steve, Amit, Tanner, they all did their
Yeah.
own. So yeah, maybe we'll bring in like Nate or somebody. I don't know. We'll figure it out. I've been slacking on this. CoreWeave, are you guys believers? Roy is not only a believer, he's a shareholder.
Yeah. Yeah, it's a little above a 10% allocation. If it keeps pulling back, I'll add some leaps for the swing portfolio. But at this point, I don't have a lot of cash left, so that'll come at the expense of something else. Don't know about yet.
Are we interested in emerging market plays like Mercado Libre, Nubank, C Limited? A lot of them are near 52-week lows.
Yeah, actually, I plan to write an article, and it may be a couple weeks out. I've been doing some research on this too, but specifically focused on emerging markets in South America. Mercado Libre is one that I know quite well, and Nubank I own. I'm a shareholder, so I continue to own that. I even bought some when it dipped to what I thought was a ridiculous price, and so yeah, very interested in it. I'm also in the article will look at some of the other opportunities that are down there as well. So StoneCo is one, dLocal as well, some other smaller names. So yeah, it's interesting when they're at this this amount of compression. But one thing that I'll say, like specifically more so to South America than Southeast Asia, a lot of people just look at the 52-week lows and just call it a day. With El Nino, and we'll see how it plays out. Like this is a super El Nino. If you look at historically how that's weighed on the Brazilian economy, which has large implications, certainly on Nubank, because I mean that most people bank in Nubank in Brazil, but also on Mercado Libre because that whole region is affected, and Brazil is the largest economy in this space. There are real valid reasons. I think it might be overdone. Why there's been some correction in some of these names. So just kind of keep that in mind.
I see people suggesting different creators for our open slot, Roy.
Ooh, all right.
Some good names in there. We should definitely reach out to some people.
Yeah, I see Chris Camillo, so we could maybe invite him to. No,
I mean, I think I know
Jose
what
would be good.
it would be.
Yeah.
Can we donate Beam and our shares to get questions answered? I mean, sure. Like, I'll take them. You can donate whatever you want. You can donate like in Zimbabwe dollars; they'll still convert. Are there any AI bottleneck companies that you're currently looking to add, specifically power related?
I probably should be, but not right now. No, but yeah, I agree that that's a bottleneck. It's a significant one, and there's a lot of names out there. I know that one of the favorites that's out there is Bloom Energy. It's run up a lot.
Yeah, let's see where it's at. Actually, Bloom Energy down. Oh yeah, it was down 18%. We talked about this. It crashed quite a bit on Friday. Yeah, very interesting. We gotta keep an eye out on Bloom, man. If it keeps falling.
Yeah.
June says, donate and liking and subbing if you're poor. Yes. Thank you, June. You guys need a woman in the mix for the stock draft. I mean, I don't know many women content creators of finance content. Are like,
yeah,
you know?
I've interacted with a few, but like
maybe
they're few and far between. So yeah.
Yeah, if you guys have suggestions, I mean, we can reach out. Like, it's not a problem. But yeah,
very open to that.
Fairly male-dominated field, I guess. I hope it gets more. Next question. Sorry, I'm getting tired. I think you can like notice it in my voice. Would you try to do more swing trading if you don't have to worry about taxes? I'm asking because I live in New Zealand and there's no taxes for trading. Yes. It's not that like I let taxes really dictate what I'm doing, but if it wasn't a consideration or in a tax advantage that counts, I'm like, yeah, absolutely. Why not?
Yeah, for me, no, not really. The amount that I swing traded, I'm comfortable with, and my long term investments tend to do better than the swing trading. I do fine on swing trading, but I do great on the long term.
People are suggesting women. Jessica Alba would be interested. Get Sydney Sweeney, Tanner. Jared says, even if you're poor, a membership is only $2 freedom. That is, yes, that's correct, sir. Get Marshall. Man, the amount of shit that Marshall gets for no fault of his own.
He's probably like the nicest guy too, you know?
Yeah, have you talked to him or no?
And I've never met him, no.
Yeah.
I've met Jess, you know, Amit's assistant. She's great. She's really friendly and nice, but yeah.
Yeah, no, Jess is great. We love Jess. But I've never met Marshall. I'm sure I'll meet Marshall at the August meetup. But that's for August.
Yeah.
Let's see. Next question. Is it a good move to sell half of Nebius and buy CoreWeave for that amount? My average on Nebius is $100. Thanks, Nebius. Congratulations. You can definitely sell. I mean, it's your portfolio, bro. Do whatever you want.
Yeah, I think it's the same play, just a few different strategies. You saw the numbers. I just go with whatever you're most convicted in. If you want to diversify, that's not a bad thing to do either.
Yeah, like you're betting on the same macro thesis. It's just one is cheaper than the other from valuation perspective, but there's reasons for that. So going into it with sort of eyes wide open is probably a good move. We've talked about CoreWeave versus I've made videos about it. Roy has made videos about it. This guy's killing the questions tonight. How big of a position and these are good questions too. How big of a position are you comfortable with? Like, do you start with 5-10% of your portfolio and let it grow? To what percent before cutting? I think it's a comfort thing. Comfort derived from like conviction. If I'm really bullish on, like, Nebius climbed to be the number 1 position. It climbed to be the number 2 position just on a cost basis perspective without considering the gains in a matter of months, and very quickly thereafter to the number 1 slot. And that's just because I was like this is a no-brainer. I'm super highly convicted in this. I definitely think this is a winner. Versus there's been like, I've had some positions where they've sat on number 10, at the bottom of my portfolio, and they haven't moved from there because I just don't feel the same way about them. So I don't think there is a rule other than whatever you feel comfortable with. Roy,
yeah, I think it's a fair answer. I tend to not allocate more than 10% unless it's a generational company and I own 2 of those only. And then I like to let my winners run. And so I'm not worried about like the percent in my portfolio necessarily. I just look at the individual ticker. So like Airtest, this was one of those examples. My average is like 22 something. And I said, hey, I'm going to first take profits at 50, which a lot of people were thinking was crazy. And I took some profits, not a lot. And I continue to do that periodically on the way up. Still own a good bit of it because I think there's further to run over the next few years. But it's up a lot. And so, it got to the point where I'm like, hey, it's past my price target. It's past my expectations. And some of it is outperformance, but it's still a little bit rich along with most everything in the space. So, yeah. But 10% is usually where I stop the allocation and I'll just let your winners run,
Yeah. What is your favorite ETF for a Roth for someone looking at DCA into 30 plus years? I like the Qs personally. I mean, you can't go wrong, I think, with VOO. But
yeah.
Are there any AI bottleneck? Oh, we answered this. It's just been asked multiple times. And on top of everything else, you have the governance risk. Are you really happy with how Tom Lee has managed the M&R at this point? Do you want to go first, or do you want me to go first?
I mean, I've criticized where I felt criticism was due. So like the request to have a larger number of shares authorized, I was fine with, but immediately turning around and investing in Mr. Beast. Didn't like that. I don't really like Orbs. I felt he's been tactically wrong on a couple of things. So I wouldn't say really happy. No, I would say it's a mixed bag. But yeah, I'll just keep it there.
Yeah. What I'll say about Tom Lee is I don't love the predictions that he makes and the fact that they're so short dated in nature. Um, and they're so like I said before, they come off as very tone deaf to where we are in the cycle and where retail investors are in their sentiment. And I mean, you could argue the merits or the drawbacks of the moonshot investments. Sure, you could argue the strategy with regards to dilution, although that playbook has largely been written before Tom Lee joined. You could argue the bonuses, although people voted on that. So, I mean, I don't want to say something is good and then bash him after the fact. What I will say is, as my biggest gripe, is the fact that he just keeps on going with these crazy price targets, and after a while, it just becomes like the boy who cried wolf. What are we buying right now? Amazon, ServiceNow, Meta.
Yeah, I in the past, I'm topped out now, but I've been buying a lot of CoreWeave. I've been buying Figure Technologies. It's not one that I think is going to take off like necessarily tomorrow, but I think there's a lot of upside over the next 5 to 10 years there.
What are we bag holding into the next week? Bag holding BM&R.
BM&R, that's right.
Yeah. Pre-markets are green at the moment. Yes, they are green at the moment. Do you think DRAM or Micron is a better buy right now?
Yeah, I'm not sure. If I was going to buy one of those specifically, just because how expensive Micron is, and I'm not going to be like writing calls against it. 100 shares is a little pricey there. I'd probably prefer DRAM just for some exposure to some other names in the space rather than just have that concentration risk. But I don't think there's a bad answer there necessarily.
Mm-hmm. Yeah, I think that entire space is going to be very successful. Any thoughts on the Robo ETF? I own DRAM and SMH and like it, but wanted some feedback. BM&R share can be provided if needed. Thought it might be a while before it's on the shelf again. Yeah, I think SMH is great. Definitely like it.
I wasn't familiar with the holdings, and I was like, okay, what's actually in this? And so you can see there's a lot of different companies there. A lot of them I've never heard of. Some like Teradyne, Coherent, I have as well. So I don't know, but I will say as far as like these kind of specialized ETFs, when you're like, I know the space is going to do very well, but I'm not sure who is going to be the winner. These type of ETFs are made for that.
Yeah. Do you think midterms are going to negatively impact any certain sector or benefit another sector? I think it's going to benefit advertising for sure. What will it hurt?
Maybe data centers. I mean, it's not just been a one party that's been skeptical against some of the data center stuff and been the source of moratoriums. We've not seen a lot of it at a national level outside of just a few representatives, but I'm kind of curious as we head towards the midterm elections if that becomes a major talking point. And if it is, if there is a big blue wave, there could be a pullback specifically there. I think most sectors will benefit. The market loves certainty, and that's what gridlock provides. So, but yeah,
It's not necessarily like the midterm as an event. It's more placing a bet on what you think the results of the midterm are going to be and what that is going to yield for certain sectors. Like if you think, I mean, look, if you think it's going to go Dem, then I think M-Phase could catch a bid for sure.
yeah, it has been up a little bit, but volatile.
That's the Roy and Tevis portfolio special. We should buy some M-Phase as a midterm play.
I need to put that in my back pocket for the stock drafting thing, and that'll be a good like later round draft pick as a
using my own ideas against me.
Yeah.
Yeah, Zeta is definitely going to do well. Like I said, advertising is going to do very well. Yeah, Elizabeth says she bought Nebius under $40. Elizabeth, if you want to be in our stock draft, there's a slot open because damn, that's a great purchase. Thoughts on INTC? That's Intel, right? Yeah.
Yeah. I think it's too expensive here, and I've never really liked Intel. Like it performed incredibly. So, but I think it's ahead of itself. You also see like there is a partnership, of course, with NVIDIA and x86, but NVIDIA is also moving into the CPU market, and I don't feel like any of that is priced in at all for Intel. Anytime you see like a crunch as far as like memory or chips or whatever, you see some of these larger companies saying, "Hey, maybe we should make a pivot and start making our own." So I wouldn't have been a buyer here, but I also wouldn't have been a buyer when it was lower. Although we did talk about like a swing trade, just because, and obviously we didn't do it. Wish we did.
Yeah. Wish we did. That's another Roy and Tevis portfolio special, which we need in this show. I think that's the next evolution. All right, let's see. Do you think Bitcoin has bottomed, and what's your thoughts on Bitcoin and or on MicroStrategy?
So, I mean, it's tied together. I think Bitcoin might have a little bit further to go. Like 53, 55, I think is probably closer to the bottom. It can go into the 40s. It doesn't have to. The bottom could already be in. But if you look at like where it's trading at right now, which is 59,000, it's not far away from the bottom. That doesn't mean that it's just going to be a V-shaped recovery. Strategy is, of course, tied to that. But we've talked about it before, STRC. Pay attention to what's happening there. That's going to tell the story like over the short term of how strategy plays out and what they do. Like I think there's an opportunity with STRC. So it's their preferred equity, and so they have a large dividend that's tied to this as well. It should be trading at a par value of $100, and it's well underneath that. And so I think strategy has an opportunity. If they'd like to do it, I don't know where it's right for the company. I don't know what this will look like as far as perception. They'll buy back some of that preferred equity because it's undervalued, kind of similar to companies that are in the space with digital asset treasuries where they sell some of the underlying to buy back their stock, which is trading under the MNAV value of one, significantly under. So if STRC continues to do that, they may do that. My prediction, if you see that, is strategy itself, MSTR, will sell off pretty hard, even though long term it makes a lot of sense for the company, like, and it just benefits them because again they can reissue at a later point where it is trading closer to that par level that they like. So
they also dropped below 1 MNAV as well.
Yeah, they track, like it's a little bit confusing for shareholders because they track it differently. So MNAV, we talk about it for like BMNR and most digital asset treasuries. Versus a market cap, and that's not the measure that strategy uses. So I'll sometimes post like their MNAV based on the market cap just so we have an apples to apples comparison. People are like, hey, it's above MNAV because of this, that, and the other. I'm like, by their measure, yes. By market cap, no. So
yeah, I have zero interest in buying MicroStrategy personally.
Yeah, like the thing with strategy is with Ethereum, you have a lot more utility. Like I own a lot of Bitcoin, so I'm not saying like this against Bitcoin, but you have a lot of utility. Plus, you have something natively that offers yield. And so, if you do something which BMNR has, the preferred equity, you have money that's coming in for expenses and offset. You don't have to constantly be in the cycle where you need to raise more and more and more to pay back. Yeah, that's good to hear. Let's have a nice green week.
Yeah, I wouldn't get ahead of yourself there, but it would be a nice present for July 4th. That's for sure. What do you think is Zeta after Palantir partnership? I think we were already asked this. Trading at a very low price to sales and forward price to earnings. Yeah, like I think Zeta is a good company. I think neither of us are really interested in it, but I don't think have anything bad to say about it.
No, yeah, good company, good opportunity. I just prefer great ones.
Tevis looks like he's ready to speed run these questions. Yeah, man, like they just keep. I have to speed run them because, like, I started 24 minutes ago. No, sorry, 34 minutes ago, and I was at 30 questions. And in that entire time, I'm still at 25 questions because you guys keep asking questions as we're answering them, right? But the show is 2 hours. Like the show is it will go on for another 30 minutes. So keep them coming. I'll pause it after a while. I don't know what happened with Roy, but his mic is still on. So he probably got like a blackout or something, because I can see like the outline of his face, which is very creepy actually. The guest was supposed to be Matt, but Matt did not join because he thinks he's too good for us. Yeah, this happened to Roy before. When it has a blackout, it just like freeze frames and it just looks really freaking creepy. And it's actually, yeah, it's very creepy. I'm gonna actually throw him off the screen. It's actually kind of crazy, guys, because like I'm literally right now, literally in Eastern Europe, and my internet is somehow better than Texas internet. So, I don't know what needs to be said about that, but look, man, you guys made fun of Canada internet for a while, and that was not nearly as bad as Texas internet. All right, let's see. What do you think will be the pivot point for Meta in terms of stock price? I think with regards to Meta, we just need more earnings for them to prove out the ROI for AI. And then as we get more of their Muse models coming out and we get benchmark rates on Muse, as that gets expanded to their product offering. So for example, the new glasses had Meta's own AI in it, like they had Muse models in it. I think you're going to start to see the actual ROI of their CapEx spend in real time, how it integrates with their product offerings. My thesis has been that towards the back half of the year is when Meta is going to start to run. And we're going to see how that goes. But I really think that the next several quarters for Meta, like we're going to get an expansion. It's going to be better than the analysts are forecasting with regards to their spend. And don't forget, that's all in Meta's hands. Like they can make it much more appealing, but they're choosing right now to invest as much as possible so as to capture market share. But Meta, like I said, has the best distribution out there, so they're going to be very okay, in my opinion. I'm going to be in London, and yeah, I'm going to be traveling for work. Only there for 3-4 days. So let's see. I can answer this. So yeah, I bought ServiceNow. I bought Amazon last week, and I think that was all that I bought. I wrote a whole bunch of covered calls and cash secured puts on other stuff, but in terms of shares, those were the only two that I bought last week. Yeah, I'll try not to. Yeah. Thank you for that. I appreciate the concern. Let's see. What made me start investing? I think like I really was just fascinated at this idea that money could work for you. And growing up, I think I always had good role models for entrepreneurship and business, but never really good role models for investing, because financial education wasn't really that deeply embedded in my family. And so it really was eye-opening. We did this in school for economics class. We did this like stock market investing challenge, and I ended up winning that because I was like day trading penny stock biotechs. Completely got lucky, by the way. It was only 1 month challenge, and one of them blew up, and everybody else was like investing in super safe stuff. And I think that really fueled this idea of like, oh wow, this can be possible. And then I actually started in 2017 actually day trading biotechs, and I started losing some money. I was like, oh, this is very dumb. And I learned from there how to not lose money. So yeah, do we own Tesla? Neither Roy nor I currently own Tesla. Yeah, we'll see if Roy actually returns or if I'm going to be alone throughout this whole stream. Um, let's see if there's any other questions here. Yeah, welcome, Neil. Good to have you. Let's see. Am I buying the Anthropic IPO? Honestly, this would be the IPO that I would be most interested in buying. I don't have any interest to buy the OpenAI IPO, nor did I buy the SpaceX IPO. And I acknowledge that Anthropic is going to be very overvalued, but I also think it could be the most compelling one of them all for me to potentially get in at IPO. And that's something I don't really do anymore at all. I just don't invest in IPOs on principle. But OpenAI is going to be very hyped, but I think their growth rate is backing it up in large part. Although I'm not really loving what they've been doing recently by limiting so many of the models and like the degradation of the quality of the responses. I've used Claude so much less than before because the quality is much more degraded than before. Um, I started investing at 23, I want to say, around that age. Yeah, 23. I wanted to start earlier, actually. I was in school when the Meta IPO or Facebook IPO first happened, and back in 2013, I think it was. And I asked my parents for like $2,000. This was after I won this like competition or whatever. And I was just like, guys, like, please just like Facebook is going, public and let me just invest it. And they were like, nah, we don't think so. You should focus on studies because they thought that investing was going to take a lot of time away from my studies. Long story short, I didn't get into Facebook at IPO and that kind of sucked. And so I got in when I started actually making some of my own money after university, because before that point, any money I made, I kind of needed for school. Let's see. Let's see. If you had an equal percentage in all of your positions, what would you add to based on current valuations? Well, I mean, look, I already started off the stream talking about ServiceNow's valuation. I think Amazon has a great valuation here. I think Meta has a great valuation here. I mean, Nebius, I think, is a little bit extended in the short term. I think SoFi has a great valuation here long term, but again, I think it's a more of a rate cut story or a rate story in general. But yeah, I think between those three, those are the top ones of my existing positions that come to mind, which is Meta, Amazon, and ServiceNow. I think those ones are the most compelling ones of what I hold. And yeah, Facebook went down for like the first 6 months or the first year. But boy, oh boy, did it go back up after that. Futures up is interesting. Thought the war restarted. I mean, it's on pause until Friday, and then it's going to restart again. What countries have you been to on your European trip? Yeah, so mostly Albania, Italy. Going to go to the UK next week. I've been to quite a few European countries, but these three are the ones on this current trip. Biggest ever winner and biggest ever loser. I think it's different for me on a percentage basis versus like on an aggregate dollar basis. Aggregate dollar basis, it's all relative because the portfolio is way bigger today than it was in the past. So like on a dollar basis, I would say Nebius is my biggest winner, BMNR is my biggest loser. On a percentage basis, I'd say Tesla is pretty up there on a percentage basis. Um, I invested in 2019, sold out in 2025. I mean, I sold tranches along the way, but that was a really good play in general. Biggest loser on a percentage basis. I've had stuff go to zero before. I literally get delisted, but thankfully I only had like, $1,000 in it or something, and I just sort of left it there. And I said after it was down like 50 or 60%, was a biotech, by the way. Don't invest in biotechs. I don't do it anymore on principle. Um, yeah, after it was down like 70%, I was like, screw it. It's either going to go to zero, it's going to come back up. I don't even care anymore. It went to zero, like literally went to zero. I got in the mail letters of like people suing and and delisting. Why Albania? Is because I am Albanian. I'm literally from there, born and you know raised to a large degree. Oh, Sir Charles, remember me asking you guys hymns versus BMNR first to 100? Still think either is possible by end of year. By end of year, I don't think either are going to go to 100. Which one do I think goes to 100 first? I have no idea because if we really get a violent crypto bull market, I could definitely see BMNR going there, especially if you get a NAV expansion. But if this peptides thing is far bigger than we expect, then I think HIMS is going to do very well in that environment. Let's see. Yeah, thanks for the warning on biotechs. I was considering them with all the human software talk recently. Biotechs will live and die with FDA approvals, man. And I think if you're not, super into that, if you are super into that world, like you can make a lot of money. Like Shkreli has made quite a lot of money in biotechs recently because he just goes super deep. But yeah, for somebody like myself who wasn't super deep into it at that point, like you just get an FDA approval not go your way, and the thing's down like 80% overnight. So, yeah, exactly. Um, you guys doing a draft? How come you guys didn't do it with the mid and them got beef? Would like to see you guys and everyone's. Yeah, like I think it's not so much a beef thing. It's more like after a certain amount of people, like the draft becomes a little bit untenable because there's only a certain amount of stocks in the pool, right? Um, there's like a sweet spot. You do it with 5 people, 4 people, maybe 6 people max. You can't really do it with like 12 people. It just doesn't, it's not fun because the person who's picking 12th is got like, you know, no picks left, first of all. And also there's so much like crosstalk and it's just so difficult. It becomes unruly. So there is a sweet spot. Yeah, exactly. 4 to 6 is solid. Anything above is too many cooks. That's exactly it. So it's not anything nefarious. It's just logistics. Thoughts on T1? I haven't. So I have a note to look into T1 from the last videos where you guys suggested it. I think it could be a really interesting play, but I haven't looked at it yet. So it's still on the to-do list. Yeah, look for Figure, like the thesis is interesting. It's really a rate play, similar to SoFi, right? If rates are down, then that home mortgages HELOC space is going to be the demand is going to be higher, and as a result, I think Figure is going to do very very well. They also have the blockchain component, which I would imagine has some sentiment tied to crypto, and crypto is also in a winter right now. So regardless of how good the business is doing fundamentally, I think the macro is a big piece there, and Figure gets infinitely more compelling for me if the macro is the wind at your sails. Do I think there's going to be a tech pullback very soon? Yeah, I mean, look, you're going to have local sort of pullbacks. I mean, we just had one recently, um, but a lot of tech names are not as expanded as you would think. Like if you look at Nvidia at 190 and Amazon at 230, Meta at 550, like it's not these crazy numbers, right? And then you look at like the microns of the world, but like and then if you look on a forward basis and you account for their growth rates, they look cheap as well. So yes, you could get wider pullbacks, but largely I think we're going to be climbing the wall of worry over the next several months, at least as we go into midterms. And then midterms, I think we can have a conversation around more sustained dips. Dude, I think at this point I have to buy Roy Starlink because just to save my uh, butt from having to face all you guys in a single stream. So I hate it when he does this. Every time he does this, I'm like, oh man, I gotta actually talk now and not just look at the chat and laugh. Speaking of new, are you starting adding? I think this is a question for Roy because he's the only one that holds new out of the two of us. I don't hold it, nor do I want to hold it because I can only hold a certain amount of things. And I already have a pretty big position in a fintech company that you guys might already know of. So, would you take a polymarket bet on a July interest rate decision? Odds are good. I can't take a polymarket bet because I am in Canada and that's not available to me in Canada. If I could, I would probably bet that rates stay the same and don't get hiked. I think it's just like the game theory optimal move for Warsh to make is to not hike rates, or at least not rush to hike rates. If he drags his feet uh, and gets more data, and then the data is pointing to the fact that, oh, wait a minute, the macro is a little bit better than we expected, then it's a win-win for him because he doesn't have to hike and then cut immediately after. So I think it's pragmatic for him to just keep rates steady where they are right now because it's very soon to be hiking rates, right? Um, that's where I would, bet from a polymarket perspective. Thank you for the $2. Ironically, donated to Roy's channel. He's not even here. Can you recommend a good entry point for Micron? It depends on your holding period, man. Like if you think that Micron is gonna stick to their guidance for their growth and going to grow into that, then I don't see this being a bad valuation at all. Like the Micron CEO was saying, hey, supply is going to be constrained for the foreseeable future. We actually don't see where the supply constraints end for us. Now, you have to be asking yourself how much of that is priced in relative to where I'm buying it. But again, your your risk gets smoothed out by your holding period. So if you plan on holding this for 10 years and, if you buy it at 1200 versus 800, at the end of the day, it's not going to be like huge because the macro supply constraint is going to be the wind that takes Micron higher. Like obviously it matters the price you enter because it's like the expected returns you can get based on that price. But we're in such unforeseen territory with regards to the supply constraints that I think Micron will do very well. And I mean, even here, I don't see it being like if somebody gifted me Micron shares right now, I probably would just hold them. But again, please do your own homework. None of this is financial advice. Um, I don't even know what Roy would say to that question, but you got my answer. I went to an RM store a few days ago in Vegas. They let me try on a $1 million watch. There's so much money out there, it's stupid. Yeah, and then RMs also look like you got them out of a cereal box. So I don't know why you would pay $1 million for an RM. Like I could think of quite a few watches I would pay $1 million for. It's definitely not a freaking RM. Adding VG now. Well, I think long tail is going to be good for VG. I think short term they are hurt, and they are going to continue to get hurt by the geopolitics, like with Iran ending. I mean, VG went at the beginning of April, it was at $17, and today VG is trading for $11. Like that's a huge drawdown. But I think like if you plan on holding it for years, like I think VG is pretty solid. Yeah, Roy has to make up by doing his own solo stream. Yeah, and then I can just cross stream it on my channel and not be up at 2 a.m. Just carrying two channels. That'd be nice, wouldn't it? Yeah, I am a little bit slow in answering some of these because I'm simultaneously like bookmarking other ones, then filtering through to try to pick something while trying to maintain a coherent stream of thought all throughout. So that's why I'm out of practice, I would say, at holding a solo stream. What am I DCAing into? Honestly, I could see myself thinking, building a bigger ServiceNow position. I'm getting really more and more interested in it. When Golden Visa, don't you know Noto? Dude, I don't know. If somebody wants to sponsor my Golden Visa, I'll happily do that. But I'm not, I'm not, I don't have Noto levels of wealth. All right. And I do know Noto, but I don't know Noto like that, you know? So wait a minute. I shouldn't even say that I do know Noto. I've talked to the dude once. Like that's it. I don't know Noto at all. Yeah, don't want to spread some false news here. Elizabeth says she's trying to build a now position as well. Yeah, I think it could be interesting. Yeah, like I said earlier on Zeta, like I think they'll do fine. I just don't like the space is not compelling enough for me to be like, oh yeah, let me build a long-term position in Zeta. And I don't think there's a compelling enough narrative for me to say, let me build a swing position in Zeta, right? Do you think we're rotating into SaaS again? Seems like the pump we got a month ago is happening now, or is happening again. Yeah, like SaaS is the other side of the seesaw with the AI trade. When one is up, the other is down, and vice versa. I think the next earnings run in the summer is going to prove out a lot of the staying power of many of the staple SaaS names, ServiceNow being one of them. And you're going to separate the wheat from the chaff in terms of what has been sold off justifiably and what has been sold off irrationally. And I think you're going to have a lot of violent turnarounds in SaaS names very shortly, like within the next 1 to 2 quarters, because you're going to have commentary and guidance reiterations. And some of these companies are trading for incredibly cheap relative to where they were, just 1 quarter ago. So what you want to do is you want to position yourself ahead of that event if you want to profit from that. Again, it's like, don't catch a falling knife because you're going to get bloodied. But at the same time, a lot of these companies don't deserve to be down so drastically. I don't have Noto's phone number at all. All right. Well, thanks, DS Greg. Yeah, Tanner does the live stream alone on a daily basis, and he's been doing that now for a while. This is what happens when YouTube is your full-time job. Like you get good at it. What's the best piece of trading advice you've ever received? I don't know. I would have to think about this. The best piece of trading advice I've ever received. I don't know. I would have to think about it. Let me think about it. Did you get SpaceX IPO? No, I passed on it because if I had gotten the shares, then I would have not been able to participate in any future IPO. I would have been blacklisted. And I just didn't think the SpaceX was worth it. So, all Tanner does is rant about how cheap Nvidia is. He's not wrong, man. It is cheap. So, like, I think it's a justifiable rant. Nvidia under 200 still is quite crazy, if you ask me. I have a large investment in Nebius and won't add more because my cost basis is so low. Do you like iron? I'm strongly thinking about buying 800 to 1,000 shares. I think like the logic is wrong here, man. Like, who cares about the cost basis? Like, cost basis is such a vanity metric, right? If you believe Nebius is the best investment in the space, is better than iron, then why would you diversify into something that's worse? Just buy Nebius at a higher price, increase your cost basis, but you have much more capital that you're commanding in that position. And ultimately, you're going to profit more when Nebius goes higher. Like, I would rather do that than buy something that I'm less bullish on. For what reason? Because it's cheap? Well, it's cheap for a reason, dude. So yeah, I think this is a good advice. Change your portfolio filter to total value instead of percentage gains. Just another way to think about it. Like in your position, if you're bullish on Nebius, just buy more Nebius, right? Or at least buy something else, but like don't diversify for the sake of diversifying, just because something is cheap. Because I mean, in iron's case, there's reasons why it's cheap. Thoughts on TJ discussing possibly going super heavy into BMNU? Oh man, the thing that I don't love about BMNU is the decay, and it's a very risky bet. I'm sure TJ is thinking about it probably with a very small percentage because he's a smart guy. But at the same time, it's very difficult to time something like this. Like, you are in a crypto winter right now. We don't necessarily know when that's going to turn around. I mean, my thing to TJ would be like, why not just buy Leaps, dude? Versus, because like Leaps, I think is more manageable than BMNU because BMNU is going to time decay, and I mean, I guess they both are, but I would much rather buy Leaps. At what price would Palantir and Nvidia need to be for you to build up a position? Yeah, I think like Palantir under $100 would be pretty compelling. I think Nvidia, I don't know. I would start maybe even writing cash secured puts like at 185, 180 ish. And I've been in Nvidia multiple times over the past 12 months, in and out, in and out, in and out. Not really a long term position. But I think over time, I want to have my portfolio be much more mature in terms of what I hold, because the numbers are getting a little bit larger now, thanks to Nebius and some other names. And so that's the part of the thought process behind Meta and Amazon. It could have just as easily been Meta and Nvidia or Nvidia and Amazon, right? Like, it doesn't. I think they're all going to be fine on a macro because of what I mentioned at the beginning with the passive investing and ETFs and the entire market being valued higher 5 years from now than it is today. But Nvidia trading where it is kind of criminal. Do you have crash cash? I believe that's called margin, sir. And I do have margin allowance. So yes, I guess. All in Nebius $400 calls next week. Dude, okay, so you can get a stupid amount of money selling those calls on a weekly basis. And like, you can sell 400s next week for Nebius and probably get like $1 or $1.50 or something out of them. Like, ridiculous for 5 days to expiry, $150 out of the money. It's insane. It's just like free money, honestly. Yeah, let's see what else we got here. All right. So yeah, is it worth to get into Micron or wait for a pullback? I mean, you could wait for a pullback as long as you acknowledge that there is a possibility that this thing can totally run away from you and you can just never get a pullback, or at least never get a pullback to the level that you want to get a pullback. Like if you're saying, oh, I want to wait till 900, like great, just write cash secured puts at that price and get paid to wait. But if you're waiting for a pullback to like 300, then, I have some tough news for you. So it all depends on like how badly do you want those shares. I think generally speaking, you can afford to write some cash secured puts and get paid to wait. Like I think that's the way that I would approach it, but to each their own. Can you do some option classes or videos? So I am thinking about this. I'm really wanting to do a full like don't hate me, a full course, mostly just to write down all the ideas and the concepts and just explain them, because by explaining them, I think I just want to have them in video format, not necessarily charge like hundreds or thousands of dollars for them, but there's a ton of interesting concepts that I read about, or rules for personal finance and budgeting and options and investing and real estate and all this other stuff that sort of just lives in my head. And I kind of want to do it because there's a lot of people, and I'm seeing it here as well when I'm in Albania. There's a lot of people that just don't have that same financial education. And so I kind of, want to create 50 videos or 100 videos on it and just say, hey, look, this is a library of all of these different concepts. And like there's additional reading for whatever thing you want, but here's just me explaining it on a whiteboard very quickly. I don't know. I know people are like allergic to the idea of courses, but at the same time, I think it could be interesting to do because it's just like writing, a book. Like the Psychology of Money is like one of my favorite books on this topic because it just merges so many different ideas and concepts together. It's not like anything is novel or groundbreaking there. It's just an amalgamation of all the ideas. And I think I just want to do the same thing, but in video format. I don't have time to do that right now, but eventually I want to do that. What Canadian account do I trade in? Just a regular non-registered? Yeah, so I trade in all the tax haven accounts, and I also have margin accounts as well. Um, Definitely work on the tax haven accounts first because you just get beneficial preferential treatment on those. Yeah, thank you. I think it could be nice because I don't want to do it just for like, oh, how to find the right stock. I kind of want to just go balls to the wall and just be like, all right, here's the order of events that you need to do it in: personal finance, budgeting, saving, habits, how do you track everything, um, so on and so forth. I think it could be cool too. 2 a.m. in Spain. It's also 2 a.m. where I am as well. And I'm And if you ever sell at a loss, look up tax loss harvesting. Yeah, very, very powerful tool at your disposal. I'm going to be wrapping up the stream very shortly because it's reaching the 2 hour mark, and I want to respect that for you guys. Um, I don't trade too much, Neil. Yes, you do get flagged, but it's only like if you day trade or you have like hundreds of trades a week. If you do swing trading and you buy and you sell, but you like if I look at my TFSA, the main trades that I have, like quote unquote trades, it's just when I'm selling covered calls. And I sell covered calls like on my positions every week or every 2 weeks or maybe monthlies. But that's not enough for it to constitute like trading. It's really like a day trading rule. So if you think about that frequency, that's where you're going to get flagged. Otherwise, I think you're fine. How do you feel about Portugal's knockout round teams they have to face against Argentina's lax schedule? All right, I might have a little bit of a spicy take on this one because I made a post on X and I said if Portugal beats Colombia, they were going to be on the other side of the bracket. I think we can even look at the bracket together, guys, because people are giving so much shit to Argentina. But I kind of want to, stand up for Argentina right now. If we look at the bracket, you can see hold on, let me just check that you guys can see this because I'm only on one screen. Okay. If we look at the bracket, you can see where Argentina is right here, right? And then you can see Colombia down here. But Portugal and Colombia tied in their game. And my post was if Portugal had beaten Colombia, they would have come in the first in the group, and Colombia would be here against Croatia and Spain and the United States and Belgium and like this really tough bracket. And Portugal would be down here coasting against Ghana and then playing against Switzerland. And ultimately, my post said they would face Argentina in the semifinals, I guess this is, or quarterfinals. It is entirely the fault of Portugal for where they stand in the bracket right now. Because if they actually had finished first in their group, they would have had, first of all, a game against Argentina in the quarterfinals. And second of all, they would have been coasting in this easier side of the bracket. But because they finished second in their group, because they couldn't secure a win against Colombia of all teams, they are in this side of the bracket. So I'm sorry to all the, Cristiano Ronaldo stands out there, but like Portugal made their bed and it's entirely their fault and not Argentina's because Argentina has crushed every single game that they've played and Portugal just frankly hasn't. So it's gonna, it's a bad World Cup, I guess, for Ronaldo fans, but I think it's just very emblematic. Who do you want to win? I kind of want to see a back-to-back Argentina win, Elizabeth. So just to stir it up, and I think just put the final nail on the Messi Ronaldo saga, because I just think Messi is playing an amazing, amazing game. Like top goal scorer in the entire championship. The team is very coordinated. They look really fresh out there, and I mean, I saw Messi live in Qatar and I kind of want to see it back to back. Yeah, Portugal barely got away with a draw, let alone a win. So I don't think Ronaldo fans have, a leg to stand on with regards to talking about how easy Argentina has it. Yeah, they have it easy because they won every single game that they played. Anyways, um, Ronaldo has more money. Yes, he does. He owns a whole bunch of hotels, I think. And yeah, Messi's going to lose that title because he's going to retire, and then Mbappe and all these other guys are going to have like way more World Cups to catch up. But it's still, I mean, I think people are looking at this like the last World Cup for Messi and Ronaldo together, and this is the last, world stage where Messi can prove that he's actually much better. And yes, Ronaldo has more individual titles and all of this other stuff, but football or soccer, however you want to call it, it's not an individual game. It's a team game. Anyways, let's see if there's any other like spicy comments I want to bring up on this point. I don't think Ronaldo plays in the next World Cup. Forget about that. His team freaking hates playing with him right now, man. Like they constantly bicker because this guy is trying to hog all the attention. And meanwhile, you have these young guys that like they want to prove themselves too. And you got old ass Ronaldo, like 40 years old or 30, whatever years old, just trying to hog all the attention. Like Messi, on the other hand, is a team player. Like he passes the ball, he organizes the game. I think like he's less selfish, I would say, with the game. And I think the team likes playing with him. Plus, you know, yeah, I don't know. I don't think either of them are going to play for the next World Cup. You should buy the Tudor Black Bay Pink if you like Messi. Honestly, that's a great watch. Black Bay in general is a great watch. Yeah, I don't have a Tudor, but I could definitely do with a Tudor. Yeah, Messi's team absolutely. Like how? Why wouldn't you love him? He got you the last World Cup. I mean, the entire team is fantastic. So I'm just gonna do one last sweep at the remaining questions I have to see if there's anything interesting to pull out, and then I'm already over time, but Okay, let me wrap it up there, guys. I apologize for the technical difficulties we had this stream. I hope you guys enjoyed it regardless. A little Sunday stream for you. Futures are green. The week ahead is looking good. 4th of July week is coming up. As I mentioned before, we are considering doing a 4th of July stream because we're not going to be streaming on Friday. And yeah, hopefully you guys enjoyed this. I'm going to be putting out a Service Now video probably tomorrow morning is when I'm going to schedule it for. I'm just going to do it right now before I go to bed. And I'm going to schedule it for tomorrow morning. So definitely check that out. I really appreciate that. Share it out with people, who you think would be interested in that type of content. And I'll see you guys very shortly on our next stream, possibly on the 4th of July, and then later a birthday stream. So we'll do that. I think it's going to be a lot of fun. Thanks everybody so much, and have a good night. And I will see you soon.